So Creamer Media's Mining Weekly Online is talking to Dr. John Bristow, a long-serving consultant geologist in diamonds who's been with De Beers, who's run his own companies over a period of 30 years. John, what is the current state of the diamond business?
Martin, like most of the commodities, is facing some headwinds. It's probably slightly better positioned to see through those headwinds. De Beers and Botswana have been very good about leaving diamonds in the ground to reduce production into the market, and that will help underpin prices. And equally, the Russians have been building inventory. So, with two big players like that in the market, it helps to stabilize the business and firm up the prices.
And we notice now that Anglo American, which has been associated with De Beers for so long, is set on 3 commodities, and the first that they mention are diamonds because of their strong position. What impact do you think that's going to have?
Well, I think quite frankly, we should probably spin out De Beers again and let them get on with the diamond business. That's what they're good at, and let them rebuild their expertise and go and do it. Anglo, and I'm sure that's the subject of another discussion, is in a pickle, and I'm not sure that Anglo will even survive in the long term. That's my view. Diamonds is about all they've got. Platinum is tough, and they're getting rid of most of the rest. So I guess who would have thought that Anglo is in a position that they're in today, and I guess what we're also seeing is that the once relationship and cross-pollination and cross-balance sheet support that the two companies gave each other is no longer there. So De Beers is having to go and stand on its own feet, and Anglo is kind of hoping that De Beers can continue to sell diamonds and support their balance sheet.
And let's just look back at where the diamond industry has come from. It's had a lot of impacts in its journey, and we know that Argyle came in with a lot of small diamonds at the time, which had a big impact, yet they seem to absorb it. Are they able to absorb these impacts? Will they be able to absorb what's coming in the future?
Yeah, Martin, again, credit to De Beers and the diamond fraternity. I mean, if you look back on the history, diamonds go back 4,000 years. You see them being produced back in the early days of the Indian history. De Beers have been a remarkable marketing business, and right since the beginning of De Beers in this country, they've had shocks and problems to deal with. They've come through them very well. Back in the Boer War, they were forced to close close the Kimberley mines. We had the US recession in 81, 82, which impacted on De Beers. And so, the diamond market has seen events like this before. And certainly, we also need to just bear in mind that the diamond space is probably not quite as badly impacted as iron ore and coal and oil and everything else. So diamonds have some resilience. They'll come through this. They're going to be changes in the industry going forward. Argyle is a very good example to look at. In the late 90s, we suddenly had, at peak production, 40 million carats of cheap goods entering the market. And through very, very clever marketing and relationships with the Indian cutters and polishers, all of that material got absorbed. And the other thing it did is it exposed lots of people, particularly in the US and elsewhere, to cheap diamonds they would not have ordinarily been able to afford. So that was a remarkable marketing strategy. It impacted on lots of people. Walmart, as you probably know today, is the world's biggest retailer of diamonds, cheap diamonds. And more you see all of those people who got into diamonds, the cheap diamonds, have now moved up the value curve. So it's been an important model, and I think a lesson we should look at again, particularly when it comes to the emergence of synthetic gemstones.
So synthetics are on the horizon. Should we embrace synthetics or be hostile towards them?
No, Martin, my view, and perhaps I'm a bit of a bit different on this one. I think we should be embracing synthetics. They're not going to go away. There's a massive industry out there that produces something like 9 billion carats of synthetic diamonds every year. So the technology there is there to produce synthetics, which you can then cut and polish into gemstone diamonds. And De Beers / Element 6 are one of the world's biggest producers and have some of the smartest technology to produce synthetic diamonds. we're seeing companies in the States backed by, billionaires and people like, or movie stars, supporting diamonds, which they know where they produce. There's no impact on the environment. So there's a growing swell of people, starting to support synthetics. They're not going to go away, and rather we embrace them and find a niche for them, as we did with the Argyle diamonds.
And I always used to think of synthetics going into industrial applications, but now they're also going into jewelry.
Yeah.
And surely this is going to be another impact like we had with the Argyle entry, but you feel we can actually absorb this impact and not damage the actual genuine precious stone that we've been used to.
Yeah, absolutely. I see a gap for synthetics as we did with Argyle, and we should rather foster and encourage the business to be transparent and visible, so we can manage it, and we can market that as a special product if needs be. We forget also that since the late 90s, there's a joint venture between Lazar Kaplan and General Electric, which has actually been cleaning up brown diamonds and then selling them, somewhat cheaper than real natural diamonds into the market space with a certificate. So, those diamonds have in a sense set the trend. Yes, they're not synthetic, but they've been modified, and that's what people are good at out there, is marketing diamonds. De Beers have done a great job, as I said earlier, on the marketing platform, and let's build on that rather than try and pretend they're not there. And in China you've got lots and lots of factories producing synthetic diamonds. There's been lots of leakage of cut and polished gems, synthetic gems, into the market, and rather let's embrace that, market it, and get on top of it before it becomes a problem that we challenged with.
And mining and marketing, they seem to need to go together. You spoke about being responsible and keeping diamonds in the ground at certain times. When do you think that normality may return? That's very difficult to predict.
Martin, the work I've done and speaking to the top analysts out there, people like Des Killalier at RBC in London, I think we're in for 18 months, 24 months of a fairly challenging environment. I think again we've made certain assumptions in the past. There was the strong view in the diamond business that demand would keep going up and rough prices would follow. Well, we found, if you look at the stats and the figures, that diamonds are really like most other commodities. They're cyclical, and they go up and down sort of in accordance with world economic trends. And I think we're seeing that now. Things are tough out there, and it's affected diamonds. So I think 18 months, 24 months of hard work for the diamond companies and the diamantaires. The other thing we're seeing is there's quite a significant change and clean out going on in the sort of mid part of the market, where we have the cutters and polishers. They courtesy of various processes, including De Beers, site holder of choice, have been probably buying more rough diamonds than they should have. They also had access to very cheap credit, and so we had an overproduction and an over emphasis in the middle of the market on cut and polished goods, and that's left a hangover that's now got to be cleaned out. So I think a combination of clean out and restructuring in the middle part of the market, and De Beers and Alrosa being good citizens and holding back either production or holding inventory, will help rebalance the market and get it back into sync in 18 months, 2 years' time. Equally, having said that, I think one of the other things you realize is the importance of not having massive debt on your balance sheets, as we've seen, for example, with Anglo and other big companies. And the diamond business, also probably outpaced itself due to the cheap credit and hence debt, and we need to clean that debt out of the business and put it on more solid footing going forward.
But you also need that financing for those people in the middle of the value chain. And we see some of the banks seems to have withdrawn and collapsed and moved out. What is going to replace that? I mean, if they don't have access to easy finance, how are they going to do this? It's not really easy to buy diamonds. They're very, very expensive at the rough end. You've got to have some sort of finance arrangement. Is that going to stay in place somewhere?
No, Martin, I think there'll be a readjustment there, and there'll be a restructuring of businesses to do with less debt. No disrespect, but one of the problems is that many of the Indian companies, Indian diamantaires, speculated. They had access to cheap capital. They certainly bought diamonds, but they also took a lot of that money out of the business and put it into other speculative industries and property and stuff like that, and obviously that's come back to haunt them as well. So by tightening up the credit lines, and yes, we've seen the exit of the Antwerp Diamond Bank, which is a fairly profound event in the diamond business, and companies or banks like ABN AMRO have also tightened up their credit lines. So we have to reduce that debt in the middle of the pipeline, and I think if we do that and we get people who cut and polish, working on a firm footing again, the pipeline will clear itself and sort itself. But it does mean, again, that companies producing diamonds need to also manage their debt. Successful companies will be those, without much debt on their balance sheet and have a strong balance sheet. And I think that, we're seeing that throughout the world's businesses today, is that you need to manage your business smartly and cleverly, and you don't want to get too beholden to debt, because at some point in time it definitely catches up with you.
And you've just been at the PDAC in Canada. What sort of messages were coming through about diamonds from the PDAC?
The diamond space in Canada is quite but positive, Martin. There are a number of important projects. De Beers, Mountain Province, Guachaquo are developing a new mine complex, and there's a couple of smaller mines also being developed in Canada. And it's all been done very diligently, and the mood was realistic but positive. As it was for the overall industry, and I'm talking there obviously broader than diamonds. So it was just encouraging to see that the business is still alive and people are mindful of the problems out there, but they're dealing with them and looking forward. And from there, I spent a week in New York and spent time in 47th Street and Fifth Avenue, looking and talking to diamond people, including some of the big players. And yeah, there too, particularly in Whitestones, the business is very quiet. So it's part of the downturn that we're seeing. And but again, most of those people have seen this before. This is probably a bit tougher than other times around, but they'll see it through. And it's interesting, you're seeing a lot of coloured stones being sold with smaller amounts of diamonds, whereas in the previous good times you would have probably seen more diamonds and less coloured stones. So there's some important shifts in the market too, which we need to be mindful of going forward.
And in Botswana, the sort of centre of gravity in some ways moved from London to Botswana, where a lot of the sorting is taking place now, a lot more activity in Botswana. How are they dealing with this tough time in the business?
Yeah, credit to the Botswanans, Martin. They saw a gap that we unfortunately down here in South Africa didn't really take up. And the DTC has moved lock, stock and barrel to Botswana, and there's some wonderful infrastructure that's been built just outside or on the edge of Gaborone. Botswana is also finding it tough going. The diamond market has hurt them as well. They're still hugely reliant on the industry for revenues and income, but they have a long-term view. They're smart people. They run the business extremely well, and they're going to tough it out, and they'll certainly be there. In 5-10 years' time, when things are good again, they'll be taking advantage of it. In the last 18 months, they've had tough times. They've seen a lot of the cutters and polishers who were attracted to Botswana, courtesy of the fact that DTC had moved there. So there are a lot of jobs that have been lost amongst local people as well. But the Botswanans are creative people. They're extremely well educated. They're good managers, and they'll see this through.
Do diamond companies operate? They used to say, gold companies weren't forming a good part of diversified mining structures, that gold companies should be out on their own, and we saw that with Anglo. Anglo Gold Ashanti was hived off as a separate entity, and many people believe that diamond companies maybe perform best on their own, not part of diversified conglomerates. You made the point that you feel that perhaps De Beers would operate best as an entity that's separately listed on an exchange.
Yeah, Martin, I mean, obviously, I think these things go through swings and roundabouts, and, a lot of it's driven by fund managers, and you and I have probably seen it in our lifetimes. 1 minute fund managers want absolute focus on one commodity, and then, particularly times like this, I think people are saying, well, hey, maybe it's not such a bad idea to have a diversified commodities company. I think, one of the challenges and problems and sadnesses that I've seen is that a company like De Beers has lost so much of its expertise. Massive expertise has been lost in De Beers, and we're going to see it again now in Anglo with their restructuring. Most of that expertise, to the credit of well-educated South Africans, is now sitting around the world in other companies and many of the diamond companies. And I guess it's been very telling to me. If you look at South Africa, we see Petra Diamond has been very successful, mining old assets that were once De Beers' assets. So my sort of wish going forward is that we really need to nurture the expertise that we have in these companies, particularly like De Beers, because it's ultimately the people who make a company. And yeah, credit to Petra, they have some great people. They give them responsibility and ownership, and that really works. And more and more as I go through life, and you probably see it in your company, by giving people responsibility and accountability, it works. And those are the companies that are going to be successful, particularly in the world today, which is changing so quickly. Technology changes every day. Capital's tough. You need to work smart, and we need good skilled people to run these companies and be able to, go with the flow and change with the times.
That was Creamer Media's Mining Weekly Online, talking to Dr. John Bristow.